Spring EQ Heloc features, strengths, weaknesses. Spring EQ provides a Heloc, or home equity line of credit, offering a revolving line of credit secured by your home's equity. Key features include loan amounts ranging from $25,000 to $500,000, with combined loan-to-value (CLTV) ratios typically capped at 89.99%. This means your existing mortgage plus the Spring EQ Heloc cannot exceed approximately 90% of your home's appraised value. The draw period, the time you can access funds, is generally 5 years, followed by a 20-year repayment period. Interest rates are variable, typically tied to the prime rate, meaning they will fluctuate with market conditions. One crucial point: Spring EQ often requires a full appraisal, which adds to the upfront cost and processing time. They cater primarily to homeowners with good to excellent credit, a stable income, and substantial equity in their homes. Think of homeowners needing funds for renovations, debt consolidation, or large expenses who prefer the flexibility of a Heloc over a lump sum loan. The strengths of Spring EQ lie in its potentially high borrowing limits, allowing access to significant capital. The online application process is relatively streamlined compared to traditional brick-and-mortar banks. Additionally, they offer competitive interest rates for qualified borrowers. However, weaknesses exist. The variable interest rate poses a risk, especially in rising rate environments, potentially increasing your monthly payments significantly. The appraisal requirement adds to the upfront expenses. Furthermore, the high CLTV requirement might exclude homeowners with lower equity or those who have recently purchased their homes. Spring EQ also doesn't operate in all states, so check availability. The draw period being only 5 years could be limiting for some. Finally, customer service reviews are mixed, with some reporting issues with responsiveness and communication. Ultimately, Spring EQ's Heloc is a viable option for homeowners with strong credit and considerable home equity seeking a flexible line of credit. Carefully weigh the potential benefits against the risks of a variable rate and the impact of market fluctuations. Compare Spring EQ's terms, including interest rates, fees, and repayment options, with other Heloc providers to ensure you're getting the best possible deal for your specific financial situation. Before committing, consider the long-term implications of leveraging your home equity and ensure you can comfortably manage the repayments, even if interest rates rise.